Okay, testing, 1, 2, 3, testing, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The aunts in France stay mainly in your pants. G'day, mate. How are ya? How's your mum? Hello. Oh, is that right, KG? That's funny. I didn't do anything about that. Well, welcome everybody to Forex.Today, the YouTube community of almost 14,000 foreign exchange traders. We get together here in the morning to synchronize our watches, realign our satellites, make sure we're all on the same page. Bum, 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 ba, da, da, bum. So today we are going to plan out our trading week by going through the risk calendar, looking for events. We're also going to cover technical analysis like gold, oil, Bitcoin, euro, dollar, yen, pound, CAD, Kiwi, Aussie, whatever you want. You're the boss. So let's go. Ban, 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 ban. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. No, it's not that it's a copyright issue, it's that any music you play or even sing, people just flag you as it is. And they're just scammers. Just now I walk through the world online and everything's a scam. It's just sucks, really. Sucks. So anyways, hey, good to see you, everybody. Oh, look, I shaved extra short for you. I want to look pretty. Got a nice new shirt on for you as well. Little too much cologne, but you know, it's early in the day. It'll burn off. So hey, my name is Wayne McDonald. I've been a currency trader a very long time, and I'm still madly in love with it. So please get involved and ask questions, take notes, because I can share the couple of decades that I've been doing this. It's not quite a couple of decades, but I've been doing this a very long time. So I'm really ready, willing, and able to share. So ask questions, get involved, and I'll do my best to answer. Now keep in mind there's lots of people in the chat, so you ask a question, then I look over there for 10 minutes, and then I look back here, and you know, 1,000 messages have gone by. So if I haven't asked your question or answered your question, I apologize, but I'm here every single day. I've been posting YouTube videos for about 14 years, I think it is. There's more than 5,000 videos associated with my work with YouTube. So if I don't get it today, maybe I'll get it tomorrow. So just keep with it. Also, check your negativity at the door. Treat everyone here with respect. If you're a spammer, go spam the Bitcoin guy. We're not interested. What else? Thank you, Traders Way. Traders Way is the sponsor for the Forex.Today YouTube community. So if these webinars are beneficial, if you like them, if you're learning, if you just think it's fun, if you're here every single day, then you need to pay it back. Pretty simple. Just out of common courtesy, you need to pay it back. Visit tradersway.com. Start by opening up a demo account. Then when you're in the back office, download MT4. You can have MT5 if you want. Play some trades. You'll see their execution speed is fast, which is a good thing. Their spreads are narrow, which is a good thing, right? Their swaps are amazing, which is also a good thing. And they have world-class customer service. So give them an opportunity to earn your loyalty and respect. And maybe because of these webinars, over time you'll develop the skills and confidence you need to trade real money. And if they've earned your loyalty and respect, perhaps you'll choose them as the prime broker to your new successful Forex trading business. It's a symbiotic relationship. Keep it alive. Cool. Now, check it out. I have ghee in my coffee, so we'll see if this works. Has anyone done that before? I basically have butter in my coffee. So, let's see. Where are we? Where are we? What's going on? I don't know. Let's start with, I guess these are all dollar pairs. Let's take a look. Jim, is that right? You throw in ghee? Yeah. It's clarified butter. Cool. Flavored coffee. Well, look, I don't flavor my coffee. I don't put sauce on my steak. Sort of, whatever. All right, so cool. So what do you think? Is this an uptrend or a downtrend? Well, it depends on your time frame, right? Medium, long. Oh, coconut? Right on, that's good. Okay. So yeah, so you have to understand where you are and where you think it's going and what time frame you're trading this. So on the higher time frames, this is pretty overbought and is just looking for an excuse to have a retracement. On the shorter time frame, it's been extremely bullish. So it looks like something might be happening up on high. Okay. Could be very interesting to see what happens from here. Okay, looks expensive, but we'll see. Currently, if you're following pivot point theory on a weekly basis, this has some up to about 25. Currently, there's resistance, which is one standard deviation from the weighted mean at 124.40, which is pretty close to the 2 standard deviations from the mean on the price action. So this is very, very interesting. We'll see where this goes. But if you were a bull long term, I'd look at this and say, well, this doesn't look bullish anymore. Longer term, this is still quite bearish. So the beast, or not the beast, the pound, the great British pig, the great big pig, right now is overbought and in a downtrend on this time frame. Okay. On a daily basis, it gets even more so up there around 26. Okay, cool. So now you look at that and say, well, how does that compare with euro dollar? Does euro dollar look the same? Which one would you rather be a buyer of if you're a bull? That one? Or that one? Okay. You see the difference? Okay. So that's interesting. Now, I'm sort of breaking rules of engagement a little bit, but you have to understand there's multiple time frames going on here. So the first step I kind of look at is if I'm a bull, I would rather have a trend that looks like that than one that's moving more downward or even sideways, right? I kind of want this. Now, I understand up here it's overbought. Doesn't mean it's going to fall. It means there's a propensity it will. But if you then drop into smaller time frames like weekly pivots and then smaller time frames like daily pivots and smaller time frames like market open, all these different things give you different opportunities, right? So the first thing is, if I'm a bull on this, do I have permission to be a bull? Yeah, I do. Cool, that's it. Now, if it's downward, if it's a downward dog, I look at this and do I have permission to be a bull? A lot less. Like, no. I mean, it's bullish here, but not there. Okay? So I'm like, Notice it's measuring the same amount of time. It's the same study on the two different pairs. This looks much more bullish. So it just kind of gives me permission if to buy if I want to. Now I understand that it could be down here, okay, which would make me a buyer later in the future at a lower price. But if I drop into a weekly and then even smaller than that, you'll see that there might be opportunities, I don't know, around here. And there might be another opportunity about here. And I've been patiently waiting for something like that. So my general idea right now, if I was a bull, would be something like this. And have this continue. Okay? But we got a lot of a risk event this week and next week. And then we go into the summer. So this can get very, 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 very interesting. Okay. Master Trader, why don't you just do Bitcoin? Buy Bitcoin. What's the big deal? All right. Cool. So that's the first thought. I understand it's a little overbought. I understand there's risk. So one of the things I have in my mind is a faster move up early in the week and then maybe a big move down. Early in the month and then late in the month. Okay. So I got that in my mind. So I'm playing around with that. Take a look at USD Kitty CAD. So if euro dollar is going up, this is going down. So you understand, like, this fits perfectly. It's perfectly inverse, or nearly perfectly inverse with the euro dollar. But pound looks like this, which means the pound is the odd one out. Right? What does that mean, Master Trader? They don't have Bitcoin in Canada? Is that right? Oh, for sure, eh? Okay. All right, so taking a look at this. Yeah, no, yeah, no, yeah, no. Okay. Someone's taking this down, which is the same as euro dollar up. So now on the smaller time frame, you should be looking at what's going to happen in here. Okay. Brooke, so you're risk off on this? So you're buying a lower low? Oh, John, it could be 2 months. But the biased pivots are up there now, compliments of the firm. I just haven't sent the email to let anybody know. But if you run the new installer, it's also going to give you the new daily pivots. The new bias pivots and a few other things, in fact, if I remember correctly. And now if you run the installer, what happens is you get exactly this. Okay, I've reorganized everything. I've cleaned up everything. Everything's pretty now and well organized. So I literally wiped my MT4, and it works on MT5 now. That's all done. So anyway, so you'll get exactly this when you run the installer. And then as far as templates, there's these added too, right? If you have the complete toolkit. And then most of these are with the basic toolkit. Some of them are related to the complete, but you'll see there's all kinds of things now. Automatic Fibonacci, automatic trend lines, biased pivot points, money management tool, strategy checklist, trading sessions, zero lag moving averages. So there's a lot of upgrades that are all up there now, and they install automatically, so you don't even have to think anymore. But I don't want to make this webinar about that, but that answers your question. All right. So anyways, I see it like this, and I see that already in play. So now I'm going to look at this and confirm that this truly is in play. So I'm looking at, on a shorter run, roll reversal and moving average. Okay. Dude, where you put your stops is the easiest thing ever. If you're a seller at resistance, then you put your stop below support. Well, in this case, this is resistance. But yeah, that's super easy. The way you start is do it this way. Okay? Let's do it this way. Use a 100 pip stop in everything you do. Start there. And if you immediately say, oh my God, a 100 pip stop, Wayne, I can't afford that, then you're over leveraged. Okay? Right off the bat, you just learned something about yourself. Okay? You're ridiculously over leveraged. Now, the second thing you should do over the course of time, find out if the majority of time you win or the majority of time you lose. Okay? If you win more often than you lose, then your entries are pretty good. And then you should go from a 100 pip stop to, let's say, a 50 pip stop. And then see if after, let's say, 50 to 100 trades, if the majority of time you win or if the majority of time you lose. So now if the majority of time you lose, now you know based on your capabilities to set up trade plans and enter trades that your stop needs to be somewhere between 50 and 100 pips, which then gives you just sort of your risk reward ratio that you're looking for, right? And so you'll probably need, let's say, a 66 pip stop, which means you should be looking for at least 99 pip winners. And if you can't set up a trade plan for 99 pips, it ain't worth it because you know the risk associated with your trade plans is too high for anything less. You understand? Well, Master Trader, put it this way. If you lose 5% in a month, you're probably fired. You'd have to do some pretty big dancing with your clients to explain that. But let's say if you lose 10% of your account in 1 month, you're dead in the water. You'll never trade ever again. Unless it's your own money, and you can lose as much of your money as you want. So if you say, like, God forbid, if you made the worst month you could possibly even fathom, like the depths of hell, that walking through absolute total darkness and pain and suffering and agony is a negative 5% month, then how many trades do you want to lose to hit that? Let's say you have, can you possibly have 5 losers in a row? Yeah. 10? Probably not, right? Like statistically, like at some point, when are you going to wake up? So let's say if you lost 10 trades in a row, is that your 5%? And even then I'd say no. Right? Right? You need to figure out how you can consistently make more than 1,000 pips a month. And with that 1,000 pips a month, it's not a big win. You're just kind of doing your job. And if that's the case, then you're never in a situation to lose big. Because at some point you're like, dude, I got some really terrible trades this month. You back off and you're like, where did I go wrong? You're like, oh, I missed something fundamentally. But if you try to make money through brute force by throwing down trades, right? Like, oh, I bet you this is an inverse head and shoulders. It's not going to work out for you long term, right? You have to understand market conditions and your bias and the fundamentals behind your bias, and then you're really solid on your technicals. So you can look at your technical analysis and say, oh, these are not the market conditions I'm looking for. And you're done. But if they are the market conditions that you're looking for, then you know how to set up trades and manage your risk. Okay? So imagine you lost 1,000 trades, 1,000 pips, because you've had many just piss poor trades this month. And it adds up to negative 2.5. I think you're going to be fine. Which means, which means a pretty okay month for you on the winning side is 2.5%. And now 2.5% repeated over long periods of time is absolutely fantastic. And by the way, the best commodity trading advisors in the United States that trade global macro and foreign currencies, the best, not the average, the best, produce 2% a month. So literally, like I'm saying, if you can eke out 2.5%, you're like, oh, that doesn't feel like a lot. Dude, you're the best professional trader in the entire United States. Yeah, but that's not good enough. I need 40% a month. Wow, that's stupid. Not professional anyways. That works out fine if you have $1,000 in your account. You have $1 million in an account, nobody wants that kind of risk. Well, Tal says that seems low, mostly because A, you're over leveraged, or B, you don't have any money. Think about it. Like if you're going to entice somebody to give you $1 million to trade, you can't go in and say, well, I'll make you rich if you trade with me. Dude, they're already rich. They just gave you $1 million and it's play money. So they're not interested in getting rich. They're already rich. So they're more interested in what you can do for their inside their overall portfolio. Okay? So they're not looking for 40% a month. That's retarded, actually. Like, people will laugh in your face and then slam the door and keep laughing. Like, whoa, whoa, whoa. But yeah, look, if you're making 40% a month on $1,000, like, whatever, you have nothing to lose, so you might as well risk it all. And that's the weird thing about it, right? In psychology, in human psychology, and this has been done over many studies, when you have less to lose, you take on more risk, right? So you'll gamble harder with $1,000 than you will with $10,000. And you'll gamble, right? So let's put it this way. You'll gamble hard on 1,000, you'll gamble less on 10,000, you'll gamble even less on 100,000, you'll gamble significantly less with $1 million, and so on and so forth, right? Because at some point, let's say you got $5 million of assets under management and you're collecting 2% a year just in management fees. And then if you can eke out a little, 2% a month, you're like actually making very good money. And your number one concern is don't screw it all up. Okay? When you're managing institutional money, they're only looking for 8% per year after fees. So if you can go to an institutional investor and say, I can produce 8% a year extremely conservatively, and I have almost no volatility associated with my trading, you'll just have money fall out of the sky for you. Okay? Okay? I'm telling you. Think of it again. Institutional investors. This is when you get big FU money. So you're not going to talk to institutional investors probably for the next 10 or 15 years. But you might be able to get there one day. Which means you have to have the track record of success leading up to it, because they're going to want to see 10 years of trading history. And you'll say, here's my trading history. I never gamble. I never take big risks. I have very low volatility associated with my trading. And I have very consistent returns. My risk-adjusted performance is extremely low, yet I'm non-correlated to the beta. And they'll say, holy shit, we'll give you a shot. Okay? And where do I learn these things? Where do I learn this stuff? Did I read someone's book? Did I see an interview on CNBC? Okay? No. I spoke to 2 managers, for example, of the largest, endowment for the arts in the entire world. Okay? The former money manager for the Met in New York City and the current money manager for the Met. Okay? The former was a professor of mine in a class on managing endowments. And then I wrote a paper he said was brilliant. I just pinged him the other day. I'm like, because we were talking about actually writing an academic research paper, get it published in like Harvard Business Review or something even better. And I just pinged him again. I'm like, hey, when COVID-19's over, we should get together and start planning this out. And he's like, let's do it. Right? So think of it. Like these guys, like this is anyone with money doesn't want to lose money. They want to earn income from their money. This is where you need to get someday when you're talking to people that should want to invest in with you. Okay, the get rich thing might work for your uncle and your nanny that's got some money. But at some point, you have to understand it's not asset appreciation that people care about. It's good as long as you don't take any risk. What people want, because they already have asset, is income. They want to have toys. People want to go on private jets. They want to go on long vacations in the Caribbean. They want a boat. They want a bigger boat. They want a faster jet. They want a faster car. They want a nicer watch. And where does this come from? That little bit of income, that 8% a year that you make. Or that 2% a month is just ungodly profitable, way beyond what most people are looking for. Like I said, those are the best traders, the best CTAs are doing 2% a month, but those are ones in the world of professional investing that are pretty close to degenerate gambling. Those are really, really high results, okay? Bernie Madoff raised billions and billions and billions and billions of dollars. Sure, he was a scumbag and a liar and a thief, but you know what? He said to people to attract money to him, all these billions of dollars. Do you know what he promised them? 1% a month. And they're like, holy crap. And then he showed his BS track record. Here's my trading history for the last 30 years, which was all a lie, of course. But he proved that he could do 1% a month. Month after month, quarter after quarter, year after year, decade after decade, and money rained out of the sky. So I'm just trying to get you here, right? So I want you to have a trading history that shows that. So which means if I say to you, why don't we try to figure out how good your trading is, start with 100 pips and then measure. Use scientific methodology as I explained to you. 100 pip stops, and you're like, oh my God, 100 pip stops? I would lose 25% of my trading account if I lost one trade. Yeah, well, you're crazy over leverage. If you cut your leverage by 99%, you're still over leveraged, right? So if you're thinking 2% is ridiculous, you're like, oh my God, that's so small. Then why don't you do that for long periods of time? Okay? I'm serious. Because that's what you want to show to people. I think the worst thing you could do is put together a trading history of that you're doing 10 or 20% a month, and you do that for a few years. You might think that sounds really good, right? But it ain't going to work, is one thing. Because at that rate, you'll have $100 billion in 5 years. Why would you need other people's money? Okay? So even if you could do it and you show people and you're like, look, I grew my $1,000 account into 100,000. Give me $1 million. And people are going to look at that and like, no. Right? Okay? So anyways, just food for thought. Whatever. Okay? Just think about what you want to have in 5 years. Do you want to work with other people's money? Then you need to start producing the right results now. Okay? It might take you 3 years to get there. It might take you 10 years to get there. Do you have what it takes? If you have a 10-year track record of producing consistent results with low volatility, then in 10 years, your wildest dreams will come true. And you're like, 10 years? Dude, 10 years, nothing. Okay? Right? 10 years, nothing. It's like having a baby. One day there's a little baby, and then you blink, and oh my God, that baby's talking back to me. And then blink, oh my God, my baby's taller than me. Blink, my baby's getting married. Blink, my baby's borrowing $50,000 from me. Yeah. I mean, I'm telling you, just get on with it. Master Trader says, with your 5-year track record, what starting balance size should you base from then? Well, the problem is, I mean, the answer is as much as you possibly can. Because imagine you talk to someone, you're like, give me $1 million, I grew this $100 account. They're like, $100 account? What are you talking about? Right? But I got something up my sleeve, something that only a few people know about. I've done it in the past, and I'm going to do it again on a big scale. If you don't have much money, there's things that can be done that you would make you smile. But I'm not here to talk about that now. All right, so let's just move on, dog. Let's move on. All right, so like USD Kitty CAD, this should be going down if euro dollar is going up. So this is another affirmation or confirmation. There you go. Confirmation that the pig is kind of out of sync here. Now, notice that we're kind of down in this area, and that is oversold. That's cool. But what I would like to see first is that, and if that doesn't work, I really need to take back off, because you can see there is a propensity to go all the way here. But the first thing I want to play is, I'm going to guesstimate where the mean is. Where do you think the mean is on this one? Well, the mean is the middle, right? So that's kind of the first shot. And then up in here is going to be the next one. And that's probably not going to be this month. Okay? Yeah, but I'm saying this is going in the same direction as the CAD. And that makes sense to me. Okay. So Master is like, but what if news? Doesn't matter. Doesn't affect your bias. Who cares? Is it the Bank of England announcing either a report about what they're thinking about or a new policy? And I'll do the calendar next. Okay? It's very unlikely if you are studying economic data. Okay? Think of this, guys. If you are studying economic data, now many of you are not, so then you don't know. The whole thing is a wild guess. But if you're studying the trend in economic data, then the economic data to be released today is very much likely to be on or near trend. That's why we study it. So unless there's a crazy surprise, it's irrelevant because we already know what the trend is. We already know what to expect. And in fact, the news itself is irrelevant. What you're supposed to do is look in the trend in economic data, not just one data set. You want to look in inflation and productivity and prices and all these different pieces of economic news, and then interpret all those individual trends into the policies that the central bank will initiate in response to those trends. All we care about is the policy of initiation by the central bank. So I don't care about UK CPI. I don't care about UK GDP. I don't care about UK jobs. We already know all these trends. So there is no surprise. What surprise? When you do analysis, there is no surprise. You're either on trend or you're off trend. But all we care about is how will the central bank respond? So what if news comes out from pound and it makes pound go up? Well, then if you're a bull on pound, you'd probably look for opportunities to buy and follow on buying dips. But if you're a bear on pound and the market shows you the conditions are currently bearish, then you'll say, oh, look at that. And you'll sell the lower high. It doesn't change what you do. So let's review that very quickly. If you are a bull, you buy dips. Done. That's all you do. That's it. You don't do anything else. So if you don't have an uptrend, you're not doing anything. You're done. Stop it. Right? I think that's a Taylor Swift quote, isn't it? If you're a bear, you sell rallies in a downtrend. That's it. Okay? If you're not doing one of those two things, I'm sure your trading results are inconsistent. Okay? So you're like, so if we go back to the pound, I know the pound looks like this, but it's supposed to be going up, not down. So if the pound rallies in a downtrend, who cares? Okay? I don't buy downtrends. Now, if it breaks out of a range, then later on in the future, I'll buy a dip. But until that happens, I'm not interested. Right? You got to take control of your trading, guys. Okay? You got to take control. Thank you, SRC. What was the question, Master Trader? Can you post the link where you get and read all the bank? Yeah, go to the bank websites, dude. Here's what you do. Hey Google, take me to the Bank of England. Hey Google, take me to the Bank of Canada. Hey Google, take me to the Reserve Bank of New Zealand. Hey Google, take me to the Bank of Japan. Hey Google, take me to the Reserve Bank of Australia. Hey Google, take me to the Swiss National Bank. You got it? Hey Google, take me to the European... I mean... Not complicated, guys. Yeah. I'm sure if you saw this as $1 million opportunity, you would be able to figure it out really quickly. And the funny thing is, yeah, it is worth that. CLT, whenever I think. Okay. Yeah. Okay. So anyways, ISM manufacturing today, not that big of a deal. Okay. Not that big of a deal. Okay. Tomorrow we have the RBA interest rate decision and their statement. You need to read all this and follow up on their GDP. You need to do this or you're not on a path to being a professional trader. That's just basic. That's just basic. it's not even a minimal acceptable performance. It's like, if you don't do these things, you're not really in the business. And you're like, well, Wayne, I don't understand any of this. Well, that's a start. But the thing is, you have to just do it. Anyways, I don't even care if you understand it or not. I want you to just do it because I know most of you won't. So I want you to say, like, this is a challenge. If you know most people fail and most people won't even take that basic advice, like read the RBA rate decision, the statement. Just read the statement, download it. Where do I get it? I don't know, the RBA website? Like, it's not complicated. It's not difficult. Now, you may not understand it, but I think 90% of it is you have to have the strength to get out of bed and go to the RBA website, download it, and spend 8 minutes reading it. And we know most people can't do it, and most people fail because they're unwilling or incapable of downloading a PDF and reading it for 8 minutes. So I would just go ape crazy over that challenge, and I would do it. You understand? Like, I would do it because I know most people won't do it. And I don't know if it'll help me, but it'll separate me from the pack. Right? Simply because most people are incapable or unwilling to do it, I would do it. And then maybe over time, with some education, some research, some study, you will begin to understand what it means. Cool. Wednesday, ISM services, big deal. Okay? This is a big deal. We are a service economy. It's a big deal. Also on Wednesday, we have the Bank of Canada. Once again, you need to download the statement and read it. Why? Because I dare you. I double dare you. I beg of you. Okay? And if you can't take the time to do that, wow, you are going to really struggle because there are much more difficult things to being a hardcore trader than downloading that statement. Okay? 10 minutes of work once a month. I can't do that. Dude, I'm telling you. Then I have to like teach you what patience and discipline and hardcore trade planning, and you're like, you won't even read that? Wow. Like, wow. I'll push you out in the ice flow. All right? Just, right? Okay? So anyways, we also know we have ADP, another dumb prediction, coming out. And that'll create some short-term volatility as well. So there's some good things to do here on Wednesday. Thursday, okay, a couple more things. One, ECB rate decision. Now you're going to have to download and read their policy statement. Also, on Thursday, we have weekly jobless claims. Okay? And both of those are high impact events. Typically, weekly jobless claims is not a high impact event, but right now it is. And then Friday, non-farm payrolls. Okay? With kitty cat jobs. So CAD's going to move a lot this week because of the interest rate decision and the payrolls. Euro is going to be euro, and it's really going to move, especially if dollar remains risk on, which means weak. And then you got Aussie, okay? And remember, in their statement, they might actually say something positive like, we actually have some pretty good export data now. But, of course, there are risks out there, including potential China shutdown if they go into trade war with the United States. Okay? And I think that rhetoric is going to happen at some point. So I don't know how long you're going to be long Aussie. That's why we have to pay attention. But again, in the back of my mind, I see Trump really drumming up anti-China rhetoric between now and the end of the year. And if that's the case, then commodities will be negatively impacted because the slowdown in global trade, which then impacts other economies, and all of this should be in very obvious ways. Okay? So right now it seems risk on. I think in the next 2 weeks we might be risk off, and that's that. So there you go. Well, guys, there's always trades. When market conditions are favorable to your long-term or fundamental bias, when they are favorable, you'll have a lot of trades. When the market's not favorable, you'll have significantly less trades, but it doesn't change anything. Okay? If you work for me, you will be told what to do for a bias. And I don't care what your opinion is, nor do the clients, nor do I. That's not the point. You have a job. So if I have you trading exotics, I only want you to trade exotics in one particular direction because there's an inherent strategy behind the bias. And that bias, no, maybe not exotics, but like if it has to do with I want you to sell the Aussie dollar, it's not because I'm bearish on the Aussie dollar, not because I think you're bearish on the Aussie dollar. I need someone to be shorting the Aussie dollar as part of a portfolio. So you just have to do your job, which means when right now you've had very little to do, but every single day you might be, if there's an opportunity to take a shot south at the London Open or New York Open, it's your job to do that. And then if you see a setup on a daily basis, then you have to day trade it. Now, you may not make a lot of money or you might break even, but that you're just doing your job. Same thing with the weekly, same thing with the monthly. So when you combine monthly pivots, weekly pivots, daily pivots, intraday trading, right? You will have trades as a bear, even if the market is up, but you're risk averse and they're few and far between, but you're still looking for opportunities and managing the risk. But when the market turns bearish, and you've been a bear that whole time, you might have had 3 mediocre weeks in a row, but suddenly you have a kick-ass amazing week or two. Why? Because every uptrend has a pullback. And in those scenarios, you got the London Open set up for you, you got day trades set up for you, you got week trades set up for you, even monthly trades set up for you, or at least some of those. Maybe not the monthly, but probably for a week or two it'll come down, which means all your day trades are going to work. All your intraday trades are probably going to set up. So you might have 3 mediocre weeks, and then you'll have 2 fantastic weeks, and then consolidate. And then nobody gets nothing. But the thing is, you're doing your job, and you need to know how to do that. That's why when I see people shorting uptrends and they're bears, I'm like, I know what you're doing. Yes, you are at resistance. Yes, there's an opportunity there, but it's way too much risk. If you're trading other people's money, that's probably not appropriate. If you're going to sell at that point, then it better be a scalp, and you probably should have waited for a double top anyways, because if you can't wait for a double top on a 5-minute chart or a 15-minute chart, and this is, you know, on longer term pivots, then you're just taking too much risk. You see what I mean? You cannot sell unless there's a downtrend. And when there is a downtrend and you're a bear, you should sell aggressively. Every market open, that gives you the opportunity. Every day trade, that offers the opportunity. Every weekly swing that gives you an opportunity, you take it. And it will go away, and then you will stop. And technical analysis tells you where trends are likely to end. Okay? So on and so forth. Okay? Cool. So anyways, what a wonderful trading week, huh? So, you have reading to do on Tuesday, reading to do on Wednesday, reading to do on Thursday. Do you have the strength and the discipline and the desire to do the basic work? I don't know. Do you? Is it possible to trade purely technicals? Yes, but you're going to be surprised at times. Okay? The bigger question is, why would you not want to understand fundamentals? Okay? Why would you not? It makes no sense. But with a fundamental bias, okay, you can look and filter properly and not react to the market, but plan. Okay? So, technical analysis is incredibly important. Okay? I don't poo-poo on technicals. I love technical analysis. They're incredibly important. But if you have no idea where we're going or why, then you're limiting yourself. Why would you want to be a 3/4 trader? Okay? You're a professional trader and you should be well-rounded. Okay? So, I like a basic concept here. With contracting global macroeconomic conditions, this will get strong. That's not technical. So I can predict the future if I see a change in economic data. Okay? Like if you don't understand what's happening in the Forex market right now, right, then you have a massive gap in your knowledge that can easily, well, not easily, but you can fill the gap with knowledge. Okay? So Baby G's like ISM manufacturing in 5 minutes, not that important. Okay? Okay? You need to understand like what happened here and why, and what happened here and why. Okay? And I fully believe you can learn that. So why would you not? Why would you not want to know that? Okay? Also, I think like if you were to go into a bank and you apply for a trading job, they're going to sit down and say, you know, discuss with me the policy at the Bank of Canada and how you feel that'll impact the Canadian dollar over the next 6 to 12 months. Pretty basic question, right? And you're like, I don't know anything about that. Interview's over. That will be factual. If that happened. So I think you need to have knowledge. I don't, right? That's it. Does anyone here think if you sat down at a bank and you, or a hedge fund, let's say, and whatever, like an institution is going to hire you to be a trader, and they're like, tell us about what tell us about the Bank of Canada and what the CAD's going to do for the next 6 to 12 months. You're like, I don't know anything about that. How many people here think they'll hire you? I think, in my humble opinion, 0% chance. Dead in the water. Okay? Absolutely, totally dead in the water. Right? When are you releasing that strategy to learn 5 to 10 years of expertise in 2 years? Well, okay. I think I know what you're saying there. I'm not going to answer that. Okay. KG, those people paid me $10,000 per year to get the little blue wrench. Well, Daniel paid $12,000. Yeah. But prices are going up. You better hurry. It's going to be 15,000 pretty soon. Yeah. All right. Cool. So anyways, I'm still risk on. Okay, I'm still risk on, and I know there's some risk off in the air. There's seasonality, which I think is more important than anything. Okay. I think there's trade, we'll call it. Trade risk, I'll put there, trade risk. I think those are the two big ones. Okay. And so right now I'm risk on. Okay. But between this Wednesday, I wanted that to be blue. Son of a gun. Keep clicking blue. Okay. Between this Wednesday and next Wednesday, the risk on will go risk off. Banda, we're not trading standard market equilibrium. Right? Right? That's not what we're trading in the oil this year. So don't look at it as normal. We're still got a lot more going on than that. Okay. SRC says, hope oil goes up all year or whatever. Well, if I'm right here, the answer to that is no. It's going to come down and then consolidate. Okay. Okay. And by the way, everyone in the live trading group knows why I think this, because I've been discussing it for a week. Okay. Template, price, swing, price action pivots. Easier on the eyes, I think. There's the pound Swissy. And this is making a bold risk on move. Okay. But what I talked about yesterday in situations like this is this coming in hot and fast and then an abrupt stop between Wednesday and Wednesday. Okay? What I discussed yesterday with the group, yes, it was Sunday, an unusually bullish move with an abrupt stop. Okay? So that's interesting, especially in this move, right? You got this, but you got that. So if it did this, okay, is what I'm thinking, between Wednesday and Wednesday. Though we're far apart, we're always in my heart. Kind of like that, maybe. You should look at the calendar and try to figure it out, baby G. Okay. Oh, right on, KG. Yeah, I definitely got in a better mood, so thank you for attending. I sat around. I'm like, I don't want to do it. I don't want to do it. I'm all grumpy and pissy. I took a little nap. I woke up. and I still didn't want to do it. And then I did it, and still didn't want to do it while I was doing it. And then at the end, you're like, yeah, I feel better. And I knew I would, it just I didn't want to do it. I was grumpy. Okay. Dow, I don't care about Dow. S&P 500, okay, interesting. But remember, all of this is created by the Fed. Okay. Not technically KG, but I'm in the metro area. Okay. So anyways, let's get off this. Just pay attention. There's obvious technical analysis there. Okay. Okay. Here's the line I drew yesterday. Down, up, down. So we'll see what happens in there. I think this one also, we talked extensively like what a bull would do and what a bear would do. I think this is just where we left it off as a bear. But I think we also gave an extensive bullish point of view. I think, in fact, I know now, I remember now, that we totally had this set up first and foremost as a bull. And we then discussed where a bear would challenge a bull. Okay, there you go. And that's why I had that. And so it was more like an if-then statement. If we break through here, it's not a real break. If we break it through here, right? What does Ryan call this? A macro bear. The green candle is a macro bear candle. So down and then up. And then if we do break, then you would drag this across and it would be the new buy zone. Okay, and that's why I have it set like this. This is the same as that. Okay, so we need a down, an up, a down, and that gets more and more complicated as we go through the week. Okay. Okay. Actually, Banda, I actually talked to my my EA developer about a countdown timer, like no joke. Not a calendar, but a countdown. And so he's looking at various things in APIs to be able to pull that live data. Okay. So hang on. Maybe something good will come from that. And here's euro dollar. Okay. And you see what I got going on here? Okay, there's one here, there's one there. And if you fart around with your pivots on multiple time frames, you'll see why one here, one there. So if I'm a bull, I don't buy high, I buy low. Now, on this smaller time frame, this is a buy zone. Okay, this is saying we're about 72, 73% oversold. Okay. So price is kind of playing this. So I'll have to pay attention if I want to trade that. I'm kicking off 111. Now I wanted it down before they up and be picking this up around 110, but it looks like we got a 111 up here. Okay. So I may want to drop down into a 5-minute and start taking. Okay, there's the 5-minute move. Okay. So I may want to buy the next cycle. Okay. This area is not the same as this. It's not the same. That area is right here. So on a 5-minute chart, it's saying there's an upward stabilization. Okay? And where we're going to be challenged should be fairly clear, sort of in this area. Okay? And so I might want to either trade the next cycle up if I'm a bull, or the up and the down. Right? So this is favorable. And this is reactive, really, but, okay. Remember, your indicators are not telling you what to do. So if you're a bull and you believe this is support at a psychological level, then what you should be doing, if you believe the longer term trend is up, you need to be buying dips. That's the number one thing. How you measure a dip really is irrelevant. How you do it, nobody even cares. What tool do you use? Oscillators like RSIs, CCI, MACD. Yeah, they all work. They're great. What about price action? Yeah, that works too. What about buying at the bottom of a channel? Yeah, that works too. What about using a Fibonacci here and buying? Yeah. Dude, just buy a dip. Like, for crying out loud. This is support. If you're a bull, you buy off 111. It's not difficult. Okay? So you're going to do something like this, or something like this, or something like this, or something like this. Do it. And if you're like, well, I don't think it's going to go up, then you're not a bull. It's that easy. Why are you not a bull? You believe we're going to run into risk off. Well, I'd say, yeah, I agree with you. I don't think we'll hit it today, but maybe between Wednesday and Wednesday we will. So I get you. I got you. Great. So here's what I'm going to do for the next couple of days. And then I'm going to look for change in direction, change in trend. Okay? But don't sit around, missing trades. Okay? Don't sit around missing trades. Don't sit around missing trades. Okay? Made us risk off. Then she's probably on this one kind of thinking either that or that. So really the most conservative trade here for a bear is a test of 111 and a half. Okay? So this is what Maida's going to do. Okay? That's it. Dave says, do you think 110 is off the table yet? It's an issue of timing. I think we'll hit 110 in the next 5 years. Okay? Here's 111. Here's 110.50. Here's 110. All buyable. Now, I prefer down. Okay? But what the live trading group discussed yesterday is understanding this is likely to be over bullish early in the month. So it will probably be out of position. It'll probably be OOP CT. I have all that built in. So therefore I said to everyone, if you're a bull, this is the preferred buy. This is a secondary buy. This is an extremely aggressive buy, but the aggressive one is kicking off much sort of more aggressive styled entries. Let's make this different, right? You would be playing it off the 21, which is not right? Not a monthly pivot. You might want to drop into weekly. You might want to drop into daily. And in fact, I said, start with your bias. In this situation, if I'm right and it goes OOP on you, don't miss these pullbacks. So I said start with the daily, understanding that you might not get monthly. That's what OOP means. You're not going to get a deal. So, okay? So you'd have to then say, well, what does it look like then? So you can go to template. Okay, you're only a bull. If you're a bull, you're only a bull. That's it. So you go day trading bullish bias. And you drop into a 15-minute chart. Okay? So look where the buy zone was. Stupid obvious, right? Well, we don't know if this is going to hold or not. Okay? So we know bears are lurking here. We already talked about it. So what's the next move for a bull? Up here. That's the aggressive, so watch this. Watch this. You'll love this. Indicator, biased pivots. Turn this on. Okay. Close. Okay. Our conservative target is 111.60. Our aggressive target is 111.80 for today. But the most important thing about all of this is it fits our monthly and our weekly bias. So you're executing the same thing, but you're basically, it's not a scalp into a swing, but you know, you're still playing this price action. Okay? Which means tomorrow will be this, and then up there, and then pretty soon you'll be getting close to weekly and monthly targets, which I already predicted on Sunday with the OP-CT analysis, which means then you get this if you get that. Okay? So you're not going to get, probably not going to get this early in the month. You might not even get this early in the month. So therefore, my advice to everyone was you probably need to start with this one and trade it with the weekly, monthly. Okay? Okay? Depending on seasonality, Master Trader. In June, no. In October, yes. But then there's political cycles and business cycles and real estate cycles, actually. And the real estate cycle is extremely mature. We also have the political cycle this year. And then we also have sort of our economic and social situation, not system, but situation. So probably not this year, not that way. Yeah, you drag your stops forward. Yeah, of course. So here's how I do it. So let's just do this as an example. Okay. Let's say I entered a trade down here, the far left, and I put a stop below my buy zone. Cool. I need a higher high, higher low, and then a higher high. At that point, I move my stop. Okay? Then not yet, higher high, higher low, higher high. So now I can move my stop. Okay? Higher high. I prefer to wait to the higher low, but I might get nervous because we're losing volatility. Remember how PSAR works? PSAR uses volatility, right? So I might see this and go, oh snap, this could be a double top, but it might just be the new month. It might, right? So I might do this, even though it's early. But I know it's the end of the run, potentially, so I'll jam it more. But if you're unsure of that, then maybe you can use a PSAR, for example, which will do the same thing, and it'll make suggestions based on volatility. Not there. Trend, maybe? There. You have to play around. I forget the numbers I use on this one. Well, not those. All right. So, Well, maybe if I move it out to a 4-hour and zoom in, it's still not good. So you'll have to play around with these numbers. Indicator, PSAR. I don't remember the settings anymore. Wait, that's worse. Yeah, I don't remember the numbers anymore. 0.55. It's not quite. That's better. No change. Yeah, so it doesn't move anymore because it's one. I wonder if I mess around with the other one. I just haven't used this in so long. Well, it's not shifting, so I forget how to do it. I'll have to look it up. Okay, but what it's suggesting is where to put your stop. And it's making the suggestion based on volatility. But like this one takes you out and all that. Like, so this isn't set properly. Yeah, this is terrible, in fact. Probably have it backwards. This is going to make it tighter, isn't it? That's actually a little better. Well, not much different. So you have to play around with it. I've just forgotten. But what it's doing is suggesting. So if you bought in this buy zone, it says put your stop here. Okay? 4 hours, oops, 4 hours later, it says don't move your stop. 4 hours after that, it says move your stop to here. But you know, we're way up here. Then the next candle, it says move your stop. And then we're here and goes up, so it says move your stop. So we have a followed by a giant green candle, great. So it says move your stop. And then a little hanging red, it says move your stop. And then no higher high, no lower low, don't move your stop. You notice that? When there's no volatility, your stop is not moved. And then when it goes up, it moves a lot. So notice, from this candle to this candle, let me move this out of the way. We moved nothing. When the market moved sideways, it didn't move your stop. Then finally, we get a nice big green candle. Lock in your profit, bro. Another nice fat green candle. Lock in your profit. Why? It's moving with volatility. Okay? One more green candle. Move. Okay? Sideways action. Move. Okay? Move. Okay? And right? And then at some point, you get knocked out. You got knocked out on this candle. That's what that shows you. Okay? So it kept you in from here all the way here. But again, it's adjusting the stop, not trailing, but it's adjusting the stop based on volatility. Does that make sense? And by the way, I heard like 10,000 people just subscribed. Thank you very much. Welcome to the family. Also, would you take an opportunity to subscribe to the FX Bootcamp YouTube channel as well? There's lots of free videos there. There's thousands of Forex videos there, in fact. Thousands. Would you also subscribe there? I need to get to 10,000. When we get to 10,000 subscribers, it'll unlock some features that allow us to do some pretty cool things there in the future. So please do that as well. Oh, Anthony's got 0.02 to 2. Okay, let's try that actually. Thank you. I've just forgotten. Oh, I have 0.1 to 2. Oh, but wait, you do 0, 0, yeah, 0.02. That's what it is, maybe. 0.02 to 2. Okay, much better. Thank you. So yeah, move your stop. See the stop? No, 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 no. It's just moving your stop, keeping you in. Moving, 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 moving out. Right here. Okay? And now if you bought this green zone, your stop is still way down here. Okay, you see this? So the green zone is a buy zone. Okay? And notice here too, like when you miss the green zone because it's so unbelievably bullish, look how fast it's locking in profit versus in here where it's half as much because it's, right? It's, and then we get here and it takes you out. It's like, that was a good run. Okay. Now, if you use pivot points properly, it tells you this is where you should get out. So you would have made significantly more pips. But this is a buy zone. So maybe you bought the dip again and it's keeping your stop here. It hasn't moved in a couple of candles. Okay. So now if it goes up, 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 up every 4 hours, it'll make new suggestions for you of where, right? So the next one will be like this and then like this. And then it'll widen if you get the extension. And then if it consolidates above, it's going to look like that. Cool, right? Well, Dave, yeah, depends on your aggressiveness and the market conditions and your bias and all that. But yeah, absolutely. I mean, these are like simple little day trades, right? So this is a buy, this is a buy, this is a buy. This would have been a buy if you got a pullback. It's not that this was wrong. The market didn't give you a pullback. So therefore, PSAR locked everything in, right? And according to, right? According to the market, that's what this is, market. This is probably currently like this, okay? And this is where bulls would buy. And then if it breaks out, okay, then even better. So yeah, you're supposed to add and move, add and move, add and move. Okay? Now for the month of June, typically, and this is what we were talking about last night as well, as I say, look, you got one idea for the month of June, because we're planning out the entire month of June, which we actually did last week on Thursday. So you plan out the month of June, you got one idea. And that should lead to as many as 20 trades. Actually, I shouldn't have said as many. This could lead to 50 trades because there's 20 trading days. So there's potentially 20 day trades. But inside of that, there's about 60 possible open sessions, plus your 4 weekly swings, and then your monthly. So there's 85 trades that are, if you got the most perfect month ever, every session was bullish, every week was bullish for the entire month, yeah, you should have 85 open trades on the last day. Okay? But of course, that doesn't happen. But certainly over the course of, let's say, 4 months, have I built portfolios over 100 trades? Oh yeah, 100 plus. Over 4 months, can you build a position of 100 trades? Yeah. If the market conditions are favorable to that. It's not my alpha, it's the beta. If the beta give you a market, then your alpha is to recognize the market, trade the market, and stay with the market. That's your alpha. But your alpha is worthless without the beta. Okay? That's why you have to do risk-adjusted performance and say, how did you get your returns? Was it associated with risk, which is your alpha is, greater than the beta? Or was the beta so awesome that you traded with it? Okay? So that's what institutional investor is going to look for. How did you make your 3% a month? That's exactly right. Pure mathematics is stated what I just stated as well. We can't control the market movement. Okay? But you don't even need that. Like, you can have beta neutral. Okay? You can have beta neutral master trader and they make money. Okay? In fact, you want to be close to beta neutral, really. Okay? Where when you do risk adjusted performance, you want to say, all right, the market, I'll make up a number here. The market moved up 5%. That's the average. And okay. And your trading results, if the normal is 2, the normal month is 2, and now we have a month where you get more than double the typical volatility, right? Then you have the opportunity, instead of producing 2% that month, to have a 5 to or even more, because, right? But let's say if you had a 7% month in October, and the normal month only you're like 2 to 3%. Let's say that's your normal month, somewhere in there, and a professional comes along and says, "Ooh, 7%. That's crazy. How did such a big month get produced? Was it risk? If so, that's bad." They'll look at this and say, well, you jacked up your leverage or you overtraded and you got lucky gambling our money, and we're not interested in having you gamble our money. So they pass. You got 7%, it killed your portfolio. Well, it didn't kill your portfolio. It killed your chances of raising money. You have to understand that. Big numbers are bad because someone with money says, oh, they're gambling. Well, I don't want them to gamble with my money, and they walk. You just killed it. Why? You produce 7%. So either they have the sophistication to do risk-adjusted performance analysis, or you can explain it and say, well, let me take you through my trading history. I'll point out a few examples. I'll start with 2 losing months, and then I'll start on 2 better than average months. And I'll explain what happened, why it happened, and why both can be good in certain situations. Why a negative 3% can be good, as well as a positive 7 when you looked at it right. So the first one, you go through your losses and you show them it was your risk management technique saved, right, from massive losses. And then you show the beta and you're like, well, the average person lost 10 and I lost 2, so it was a good negative 2. Now, if you say the market, I produced 7% that month and the beta went from 2 to 5, and I took advantage of that, they'll say, oh, that's really good. Okay? But if you have a 7% month and they do their risk-adjusted performance and the beta hadn't changed, it was a normal 2% month, and instead of you producing 3, you got 7, they're like, how the F did you do that? And they're going immediately, even if it's not true, they're going to blame leverage because it's part of you being a Forex trader. Okay? And you just lost your client. You had an awesome month. You produced 7%. The beta was 2. You should have produced 3. You got 7. You got it through leverage. You're a degenerate gambler, and no one will ever invest. Or you better have a unbelievable story of why you did that or how you did that without leverage. But the problem is, you'll see, because, you know, Forex traders are alternative investment strategies, right? We're alternative investors. If you have a conservative client come in with conservative, auditor, they're immediately biased that Forex is risky. right off the bat, you got strikes against you. They, and very often, and I mean like a due diligence team when I say auditor. The due diligence team is paid money to protect their clients from undue risk. They hate your guts before they even show up to your office. And then they're like, 7% on a 2 beta, you're dead. We're out of here. Thank you very much for your time. We're not interested. Doesn't fit our objectives. You're dead. Goodbye. You understand that? How many people have not had this sort of point of view before? Either haven't had it before or appreciate this point of view of sort of performance and how to raise money and how to think and act like a professional versus just making a bunch of scalps and picking up quick pips. How many people appreciate it? Beta is the market. Alpha is your ability to outperform the market. Okay? Yeah, and Peter's one of the few that's been out there in the trenches, right? Imagine when you sit down with a potential investor, let's say they've talked to 8 other potential investment opportunities. You're just another trader to them. The other 8 people immediately brag about how good they are and how much money they'll make. And then you sit down and you're like, let's go through the 2 or 3 worst months over the last 5 years, and I'll explain why those months were bad, but how they are actually good performance indicators for you to know because of, how my alpha protected my clients from adverse beta. And they're like, what the? And you sit down and go through your top 3 worst months. You're like, in 5 years, this was my worst month. But I'll explain it why and why it was actually good. And then second one, this was a horrible month too. But let me explain what was happening. Do you remember when such and such thing happened? Yeah, do you remember how the people's portfolios dropped 40% because of COVID-19? Well, in that particular opening month, I had a -4. It was horrible because I had built a portfolio based on fundamental analysis. And then COVID-19 hit and the market dropped by 40 and I dropped by 4. But notice the next month, I was able to protect the money from this risk, wait for market conditions to stabilize, and then take advantage of the recovery. So my -4 produced the +8. Why? Well, look at the volatility. Look at the beta, how much we recovered. And why did it recover so quickly and so fast? Oh, I don't know, $6 trillion in the United States alone. So I was able to rebuild my portfolio, but then we hit April and May, and we're back to sort of normal areas, and then we got that consolidation, and now my results are back to the 2.5 sort of normal, but that's what the market produced. Okay? And they're like, oh, snap! That's so good. Right? Sav says that's good if you have all this document. Well, that's what a track record is. That's what a trade. You actually sit down and they go through it. And, so I had a potential investor, how many years ago was this now? I think it was the year I was in London. So I don't remember what. But this guy, I provided yearly and monthly results, and he had me break it down. He's like, okay, I'm very interested. And this was like a Friday afternoon. He's like, I'm very interested, but on Monday I want to see daily. I'm like, ooh, daily? You know, like how many trades that is? Like it's thousands of trades. And he's like, yeah, I'll need it on Monday. because he wants to do risk-adjusted performance daily. Monthly ain't good enough. So I had to pay my finance guy to create, new spreadsheets and new models and everything. He had to work literally 24 hours straight over a weekend. I had to pay him like 5 times more money than normal. And he had to bust it out daily because they want to see what happened on this day. But they already know what they're looking for, because they know what their worst days were. They know what their best days were. And so now they can go through and say, well, here's our worst day when we produced a -8. How did this guy go? And all of a sudden, like, oh, a -2. So he suffered because he's not gambling against the beta, but his risk management technique was a little more sensitive and responded more favorably. We like this guy. You understand? That was it. And the son of a bitch didn't invest either. So I spent all the money. But that's how it goes, yo. Okay? So anyways, we'll get you there, guys. Remember, trading is the easiest part. So here, this gets interesting. So why don't we mark this? How many people think a bear is going to protect that line? So I've already marked this, and I said Meta would sell here, right? So now you got to go in and say, is it happening? There's only 2 choices of what you can do, and it's not a tough decision, as you can see. Okay, you got this for bulls. Okay, a bull is going to buy this. Okay, but typically being down there is not bullish. Don't you stink? A little too bearish. Yeah, I really do stink. It's like weighing on my wedding day. Okay, so you have to make a decision. A bull is thinking, yipper, right? This is called a hammock. But the bear should also recognize that this may not be a true high or low. Okay, they might be trading it as a short-term range, but like if you don't know what you're going to do, that's your number one problem. Okay, that's your problem. It's not your indicators, because your indicators are so laggy that they don't tell you what to do. They told you what you should have did earlier. Okay, but if you're a bear, you have to see this area as resistance. Like, oops, this area, not that area. Okay, you just have to see this as resistance. Okay, and even if it does this now, even if bulls do their job, let me do this with blue. Even if bulls do their job, a bear is still going to sell this. It doesn't matter. I already know it. It's a foregone conclusion. Okay? So I know whether it's here or here, bears are going to sell this. Foregone conclusion. Why? I know how to trade. Therefore, I know what a bear would do and why. Okay? That's just technicals. Doesn't tell you which one you should be. It just tells you, based on your bias, what you will do. Okay? Okay? A bull's going to try here, or there probably isn't any bulls. Okay? Because we know they bought here. We know they bought here. So if they re-up, they're going to take it up top, and Meta's going to drop it like it's hot. Okay? So like you see this, like this move here, this is bulls getting out, and this is bears selling. You understand that? This is bears selling. So now this is bulls re-entering. And, right, maybe they're nervous. Maybe they're nervous. So now bulls have to buy again, or there are no bulls. They got overwhelmed and slaughtered. Right? Remember, bears eat meat. Bulls are vegetarians. They might not have what it takes up here. Okay? So a breach of that is very informative. So are they going to do it or not? Hello. I used to love Animals on Parade. I'd get my children and help them stand on their feet, and they're walking around in diapers, and they're like, oh, let's walk in a parade, the Animals on Parade. Hello. Gotta love Teletubbies. So remember, David, you already know what you want to do. None of this tells you anything. I know where bulls will buy. I know where bears will sell. And if you've made a decision on which team you're on, things get significantly clearer. Maybe not easier, but it must be horrible trading when you have no idea what's going to happen next. As described by the poet and songwriter Jim Morrison, let me tell you about heartache and the loss of God, wandering, wandering in hopeless night. That's what it feels like. How do you feel when you've lost complete confidence, right? Let me tell you about heartache and the loss of God. Wandering, wandering in hopeless night. Just completely lost. Without hope, without strategy, without direction. Well, he wrote that before the Doors, Anthony. Remember, they met him and someone read one of his books full of random poetry, and all they did was put music to his poetry. And then you get like, come on, baby, light my fire. But, that was just a pop song. They were embarrassed by it. Try to set the night on fire. Yeah. Yeah, no, he was a poet. And then when you read it, if you know what he's talking about half the time, you're like, dude, this guy was extremely well read. Like, holy smokes. You reference things. Wow. And of course, Oedipus is only just one of the many things. He probably read the Harvard Shelf. So I got the opportunity to buy $600 worth of textbooks yesterday. Yeah, boy. So excited about that. It's amazing. In my closet, I probably have $10,000 in textbooks, most of which I didn't read. But you got to buy them. All right. Come on, baby, light my fire. Try to set the night on fire. So basically fib wars here. This is what happens. You get slaughtered in the middle of the range, huh? What time is it? Oh, I've gone so long. I'm sorry, guys. Son of a gun. Sorry, guys. Almost 2 hours. Sorry. I've been trying to get sleep lately, and it's weird because it's not that easy to do. Yeah, well, I've been trying. I've been trying now for a couple of weeks, and it's weird. I wake up and I'm just as tired, like just as tired. So it's interesting. So maybe today I'm kind of starting to get that out. It's not tired; it's exhausted, I guess, right? Well, I know you guys have your time is valuable and stuff. So, okay, okay, smells like bears. Okay. Bulls did what they were going to do. Bears are going to try to hold it down. Okay. So this is important here. Strange days. Got to install the new version of this. I don't know. I guess I'll have to do that later today. Of course, I don't want that. I want this seafoam green. And then I want the rosy brown or whatever. Cool, nailed it. Ho 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 ho! Hey now! What? Yeah, I've been trying to do that, Julie, and I've also been doing yard work around the property and stuff, which is kind of interesting. No, Master Trader, I don't need a break. I mean, I don't want a break. So that's not what I'm saying. I just need to catch up. That's all. I was thinking about renting a beach house next week and just work from there. So, like, I'd still do my webinars and stuff, but it might be fun to take the family, sit on a beach, swim with the fish for a week or so. No, no. Well, I'm on a lake now, so no, we'd go to the ocean. Down by the ocean, head by the ocean. Some sort of song in there. Yeah, we're sick of the lake. How many times do you have to kayak? My feet are all sunburned from the kayaks. Okay, now we're on the bears. Now this is where bears need to do something if they're there. Panama? No. Not far there, though. That sort of general area. I don't want to be too far from Atlanta. I don't want to fly. That's too far from Atlanta. That's got to be an 8-hour drive. Hey, Ron? Well, Master Trader, I already have a group that does all that. We do that all the time. Beep, bada, bop, beep. Yeah, that's too far, Ron. I wanted like 5 or 6 hours. Is that right, fans? There we go, yo. Yeah, boy. Right off my line. Come on, bears. Wakey, wakey. Bears are a little higher than this. The bears are a little higher. Strange. Oh, Savannah, no way. No, no, no. I want beach. Yeah, I don't really like the Atlantic Ocean. Maybe in Miami Beach or something. Maybe it's nicer down there. But when you're on the Atlantic Ocean in Georgia, it's just like muddy because of all the rivers and stuff. And it's just, there's no waves. It's muddy. There's no palm trees. You can't see your feet when you're in the water. There's no fish. It's just like, I've been to Tybee. I didn't like Tybee. You know what I like though? If you've been to Tybee, the shack, not the Shane Shack, the Crab Shack. I had fun at the Crab Shack. Yeah, but I wouldn't say Tybee's nice. I think. Um, I think Bora Bora is nice. Right? Tybee and Bora Bora are not equivalent. But yeah, you can go and have fun, of course. Yeah, Victor's like, well, yeah, but that's what I mean, right? Yeah, no. I have stayed. I have stayed like at a beach house. I think we had like 12 bedrooms and a hot tub and all that kind of stuff, and you just like walk onto the sand whenever you want. We had a good time, but it ain't Bora Bora either, right? Fernandina, sure. Um, I'm more like if you're going to be Amelia Island, right? I'm on the south end, right? I'm on at the Ritz, so I've stayed at the Ritz Carlton there. I don't know, 5, 6 times. I can't remember, but one of my favorite things about Fernandina, though, is one of my favorite cigar bars in the entire world is there. And it's weird because I walk in and they know me. You're like, huh? Yeah, the guy with his laptop. Because I'm always in there. Do you know the water wheel? I'm always in there writing papers and stuff. It's weird. They look at me like, why aren't you watching golf? Okay. So there's the Bears. They're trying. It's too early though, Bears. I think that's too early, but they're trying to hold the sand here. Yeah, you know what, Ryan? Yeah, like literally, I walk in and like they know me. It's nice though, isn't it? I like it. Okay, Bulls trying again. This is the real battle now. Bulls and Bears are now fighting it out. That's why you want to be in low, not in the middle. Okay? Is that right, Ryan? Cool. Yeah, that part of the island I like. I like the old Spanish moss trees and stuff. The others, when you're like downtown, yeah, it's fun for a little bit. But I prefer to be on the south side. So your family has a condo there. Cool. You ever go to the Boneyard Beach or whatever it's called? That's kind of interesting. But again, it's not Bora Bora, right? It's not. I wouldn't call it. Yeah, the Omni. Sure, yeah, they're nice. Of course, I'm a Ritz guy, so I'm right next door. But I've heard actually the Omni is nicer than the Ritz, and the Ritz Carlton there. It's all right. It's not amazing. The service isn't amazing. Everything is overpriced, even for a Ritz Carlton. I mean, it's okay. But I've heard the Omni's even better. But, I'm locked into Marriott, so what am I going to do? So this is all 1 minute chart, guys. This is what we're watching. Remember, everything started here. Okay? And remember how he did it? This is the bottom of a 4-hour candle. This is a role reversal on a smaller time frame. And I'm a bull. Nothing else matters. I don't care about anything else. So these are buys. This was an actual real buy right here. And then this is the second chance. And now we're taking it up here. And here's the interesting thing, just in case you're missing it, God forbid. It's not going to go higher than that without a serious challenge. But if this could fully reverse it if we go up there. Okay? So hopefully you're enjoying watching all this. I have about 3 minutes to go to a 2-hour mark, and then I'll pull the plug because I'm out of coffee. Is that right, Ryan? Well, if you're buying cigars at one of my favorite places, maybe I'll ping you sometime. I'm not going to go there this trip. Like I said, I think I'm going to get a beach house on the Gulf. It's just a little closer. I'm sick of driving to Amelia Island. I hate the drive. Sucks. So I just need to change it up. Yeah, right on, Anthony. Well, like I explained yesterday to the trading group, I'm up, up, and up on that pair. There's up, up, and up. Now, the beast I didn't like. Cool, right on, Ryan. I'm glad you buy cigars. I went to a party on the weekend, and I bought like very expensive wine. One of the best duck heads. I bought a duck. Anyway, so I bought very nice wine. And I'm a wine, whiskey, and cigar guy, right? So I get over there and I'm like, hey, I brought you this fabulous wine. I was able to score this. Normally it's only sold in restaurants, but all the restaurants are closed, so the distributor has a lot of these. And he's like, oh, I don't drink. Oh, you son of a... No cigars. No fabulous wine. So we talked about how his pool was the best investment he's ever made. I'm like, cool, right on. But so the dude's nice. He's a nice dude. We had a good time. My kids had a fantastic time. But I'm just like, oh, I wanted to share this, right? When you buy a gift, you're like, I want to share this with you. This is special. And it was special. I was lucky to get my hands on it. So it was sort of like a miss-up. Now, he made some ribs. The ribs were fantastic. So we had a good time. Like, don't get me wrong, but it was just like, I bought it and I wanted to share it, right? So anyway, so I drank it. My wife's like, the Sauvignon Blanc is great. You're like, uh-huh. friend of mine went on a business retreat with a leadership group, and he went with all his mentors and stuff, and they went down. I think it was South Florida somewhere, the Keys, I think, and they had a dinner, and they were opening up like $500 bottles of wine, and he went with the Bud Light. Then he got stuck with his portion, I think it was like a $5,000 bill, but there was 30 of them, so they all had to pay like crazy, like it was thousands of dollars per person. And he's like, I only drank the beer. They're like, well, you had the opportunity to drink some fabulous wine. The Euro Rand, yeah, I mean, it's all, well, it depends if you risk on or risk off, right? So anyways. So this is the wimpiest place for bulls to get challenged. Yet look at the line in the sand, guys. We're exactly to the pip. So the bulls are not exhibiting massive signs of strength here. Look at that, exactly the wimpiest exit. Either that or the bears are like, they're ready. Like Meta is crushing them now. Huh? That's amazing, huh? The wimpiest. Oh, you'd think you'd get up here. Come on. Seriously? Wow, bears are really holding the fort, man. Look at that. Yeah. Well, you better cut your lot size, Meta. Meta, you're moving the whole market. So anyway, so let me wrap up here. It's been more than 2 hours. What I was trying to do is show you with some basic analysis, you know what the bulls are going to do. You just know it, down to literally the minute. Okay? I drew those well ahead of time. Okay? And so you might be confused and say, well, should I be selling here and buying here and selling here and buying here? No. No. But I can very casually say, well, the bears are going to sell here and here. And that's factual. And bulls bought here, so I know they're going to buy here. Right? Like literally, look, within a pip accuracy. Right? So what we don't know is, does this continue up? Does it continue down? We don't know that, but you should know if you're a bull or a bear. And you should know where the bulls and bears are trading. Okay? And as Meta's saying, this is something we planned on Thursday. Meta just dumped it here. We planned that on Thursday. So she had to wait Friday, Saturday, Sunday, right? We actually traded on Sunday. She had to wait now Monday all the way to New York Open. And if she gets this right, she's going to make hundreds of pips and she's going to be short the entire month. Or she breaks out at break even. Okay? And like I said, even if I'm a bull, I think there's some bearishness coming for sure. And that has to do with fundamentals. It's not my opinion. I'm not guessing. I'm not throwing out wild pitches. If you look at the calendar, you can figure out where the risk events are this week and next week and put some 2 to 2 together. Also, you have to understand a little bit about professional traders, money management, portfolio construction, and when hedge fund managers love to fly the Caribbean with their mistresses. That all goes into this analysis. So, once again, I'll leave you with this thought. You've been challenged. There are 3 central bank reports you need to download and read this week. And 95% of traders will not do it, and 95% of traders fail at making money. It might be the same ones. So at the very least, even if it's like reading Greek to you, at least do it. Or do not. There is no try. Whatever. So I love you, babe. I got to jump. It was real. Thank you for giving me 2 hours of your life. I apologize. It's too long. It's too much. But I hope it was helpful. You know, the last 40 minutes we're just watching scalps on 1-minute charts. But maybe that's helpful. I hope it was. Thank you, Traders Way, for being a good broker. Visit them if you need one. Thank you for subscribing. Thank you for your likes. Please leave comments on the videos. And please subscribe to my other YouTube channel. It's youtube.com/FXBootcamp. So, peace on earth. Hang on, let's switch the cam. Switch the cam. There we go. Peace on earth. May the pips be with you. May our profits be above average. And I'm sorry about too much